It's not clear. No, I did not clear. Not clear. Wait for a while. Okay? I'm having issue with my earphone maybe because my earphone is in office. So this is okay. Can you please? Hello, Ahmad. Okay. So okay. Once again, what is your question? Or or 6:30. Also, that's why 6:30 means that after working. Uh-huh. Oh. So maybe after this, uh-huh. Maybe after this, we can conduct the class uh at night, right? So can 8 p.m. Okay. 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 So after this, we will uh discuss later. Okay. What is the so please make sure that all your friends can give me the response in the WhatsApp group, okay? So that I can know, okay, on what time you are free, alright? So for the first class is just okay. So later on this for the next class we will discuss later which time is very suitable for all of you, okay? Alright. So okay, let's proceed. Let's proceed to our chapter one. Okay. So introduction to accounting. Okay. Okay. For the very first topic is always an introduction. Okay. So let's uh, look at the learning outcome first. Okay. What you can learn from this topic. Okay. So the learning outcome is classify the significant legal and accounting features of the corporate form of organization. Okay, so let's look at the learning objectives. Okay, to know the definition. Okay, we will discuss about the definition, history, and development of accounting itself, and then to differentiate between bookkeeping and accounting. Okay, there is some difference between it, and then we can we will discuss about accounting cycle and also the various types of business organizations out there. Okay, so Ahmed, did you heard about accounting before this? Ah, okay. I heard about you before this. You're uh having a business. Okay, what type of business? Family business, small restaurant. So for your business purposes, did you record all the information? Uh, like information like a receipt and uh, you are preparing the account for your business restaurant. Okay. Okay, I understand. Okay. So if you have an experience on how to conduct a business, so you can have a pictures, okay, about what is accounting or about. Okay. So usually, okay, by learning the accounting subject, so it will help you, okay, in a business, okay, maybe, or you are working with other company, okay, to have to conduct or to prepare the accounting. Okay, so let's look more further. Okay, the chapter overview, that is definition, history and development of accounting, difference between accounting and bookkeeping. Okay, and then let's look at the accounting cycle after this, and then various forms of business. Okay, so mostly we found out uh, the business, small business like family business, okay, that we call it as a sole proprietorship. Okay, so later on we will discuss more further on it. Okay, and then let's look at the next slide. Okay, based on Frank Wood, okay, a definition of accounting is the process, okay, process of identifying, measuring, okay, and communicating economic information to permit informed judgment and decision by users of information. Hold on, Ahmed. Apa dia, Kaisa? Umi ada kelas ni, pergi sana. Kaisa, jangan kacau. Okay, so that is the definition in Frank Wood. Okay, and then let's look at Andrew Leong and Wong Sivan. Okay, what is the definition? The process by which economic information about business enterprise is being initially recorded. Okay, so the keyword here is process, recorded, okay, and then communicated to those who have to make financial decisions. Okay, it's all about recording the information. Okay, so okay, the process that we okay, this is just a surface only. Okay, Ahmed. So after this, we will know what is the types of identifying. We must know, okay, if you have in a business, you have the receipt, right? Okay, the receipt is stated the price, and then the date, which date that you maybe buy the items or product from the supplier. That is information. Okay, so we gather all the information, we record, we keep it, and then the price, okay, the information, the data about the price itself, okay, we must record in our financial statement. That is accounting. Alright, so that is the process. Okay, so after that, okay, after you record all the data, okay, in the financial statement. Okay, later on we will discuss on how to prepare the financial statement. Okay, and then in the financial statement stated how much is your asset. Okay, asset from where that you get the information. Okay, before this from your receipt. Okay, all the source document. Okay, that we call it as a source document. Okay, evidence. Okay, document or evidence. And then if you're prepare okay, prepare the financial statement. Okay, we have two types of financial statement that you need to know how to prepare it. And then after that, okay, uh okay, how about communicated? Okay, communicated and do the financial decision means that, okay, with your financial statement, okay, and then that financial statement, the information regarding your asset, regarding your liability. Okay, liability means your debt to other person or to other financial institution. Okay, so stated there in the financial statement. Okay, and then the decision, financial decision, okay, communicated to the person or the parties or the users. For example, if you want to expand your business, Okay, if you want to expand your restaurant business, to open another branches, okay, to open another place, to other to new in the new place, so you have to get, you need to have capital. Okay, capital, a lot of money, right, to finance. Okay, so so if you want to have more capital, so you want to get it from the financial institution like bank. So bank will look at your financial statement, and then they will decide whether to give you the capital or to give you loan or not. That is the decision. Okay, so that is overall about the accounting itself. It is a process. Okay, first you need to identify which types of items, which type of information, whether the expenses. Okay, expenses means that you buy, maybe you buy the foods, okay, to prepare for your restaurant. That expenses. Okay, okay, and then what is your income? Okay, for 1 month, how many income that you get, okay, from your business. Okay, that is type. Huh? Apa dia? Revenue, yes. Yeah, revenue, same goes to income. Okay, how many revenue that we generate from your business. Okay, that is all we identify first, which we classify it. Okay, measuring how, okay, how many, and communicate economic information. Okay, so that is the process of accounting. Okay, so in the first for the first chapter, okay, actually we just uh, go through the theory parts only. Okay, so after this we will discuss about, okay, we will learn on the technical parts. Okay, Ahmad. Okay, all right. I can hear you, Ahmad. Your voice. Okay. Okay. Okay, so I just go through with the lecture, okay? Alright. Okay, so you can hear, and if you are lagging because of your opening the camera, isn't it? Yeah. Alright. Yeah. Okay. Okay. Okay, how about now? Okay. So my voice is very clear, right? Okay. So if you have any question, so you can ask me, alright? Okay, I will continue. Okay, so this is the definition of accounting itself. Okay, so accounting is about art. Okay, the art of, oh my god, what's going on with it? Hold on. Okay, the art of identifying the data needed in is identified, and then we classify the sorting out the mess of accounting data into orderly categories. Okay, so we will discuss more further after this about what is the categories on of accounting data, and then another the next step is recording. The transactions are recorded in the books of the business. So later on we will discuss on how to prepare for the books of the business. And then summarizing process is the accounting data are summarized periodically into the financial statement. Okay. So and then after that, oh my god. Okay. So after that process, and then the data will be using to interpreting and communicating. Okay, financial statement are analyzed and communicate the result to the interested users. Okay, we will discuss more further on who is the interested users of the financial statement. Okay, so after that, so the users will uh, doing the decision making process. Okay, so the purpose of accounting information. Okay, what is the purpose of accounting information? Okay, first one is to know the financial status of the organization. Okay, if you uh, preparing okay the financial statement, so after that you will know what is the financial status of the organization, how much is your revenue, how much is your expenses, and then what is your profit for that month. Okay, business is making profit or running at loss, and what are the corrective action to be taken. Okay, so the second one is for easier reference because humans memory is limited, so that's why accounting is a process to record. Okay, record all the information, all the data. Alright, so the third one is to avoid misleading financial information. Okay, to avoid any error if there are no proper records. Okay, so that is the purpose why we need to have an accounting process. Okay, so this is the accounting cycle. Okay, starting with the transaction. So the transaction means that uh, the transaction is the act, uh, like such as if you go to the store to buy an item, okay, for your restaurant. Okay, so that is the transaction. Okay, and then the source document. Okay, what is example for the source document such as bill, okay, electric bill, water and electricity bills, and then telephone bill, okay, receipt, okay, that you give, yeah, give to the customer, that is source document. Okay, that we need to keep to record, okay, in order for you to prepare for accounting. And then next is journals. Okay, so we will discuss more further on journals. Okay, and then ledger. Ledger we call it as T account. Okay, T account. Okay, and then I can hear you, Ahmed. Definition of journals. Okay, okay, journals. Later on we will discuss. Journals is just like um what we call it as the how we keep all the information into journals. Okay, we have purchase journals. Okay, journals like um, how to how to explain to you purchase journal. So we accumulate all the information regarding purchases. Okay, the information about purchases. Okay, and then keep it in a table that we call it as journal. Something like that. Okay, later on we will discuss more further on the journal. Ledger also some it actually accumulation of the amount of the purchases, for example. So we open up ledger T account, okay, in order to determine whether the ledger is balanced or not. Okay, with the purchases, with your revenue and expenses, is there any balance? Okay, that you need to calculate. Okay, later on we discuss more further. Okay, and then after we done with the ledgers, okay, we must post all the amount, okay, from the ledgers to trial balance. Okay, so how much is the purchase for overall business in that month? Okay, and then we must conduct for trial balance. Okay, so trial balance. Okay, in accounting we have debit and credit. Okay, debit and credit. Okay, all right. So debit and credit column should be balanced. Okay, so that's why after we done with the ledgers, so we must prepare for trial balance. Okay, and then you also will learn on adjustment. Okay, adjustment, if there is any adjustment, maybe from the accounting, uh, the adjustment for maybe you have some of the money or debt that you are not settled yet, so we call it as accrual. Okay, this is just example. Okay, so means that you should pay for the electricity, water and electricity on that month. Okay, but then you are not paying yet, you are not paying yet, okay, the bill or the expenses, so we call it as accrual. Okay, all right, so that is example of adjustment. Okay, so we will discuss on chapter 8 on adjustment. So just hold on. Okay, so we will discuss step by step. Okay, how to create the transaction. Okay, what is the source of document? Okay, step by step we will learn, and then finally you will prepare after you uh, understand about the transaction, source document, journals and ledgers. So finally you will prepare for the financial statement. Okay, we have two types of financial statement. That is statement of financial position. Okay, financial position. And then the second one is statement of profit and loss. Okay, on that statement we will find out whether your company having profit or loss. Okay, so that is the financial statements. Okay, overall about accounting itself. Okay, if we talk about the accounting cycle, here is the process. Okay, start from transaction. Okay, and then go to the source document. Next is journal, and then ledger, trial balance, adjustment, and financial statement. Okay, alright, Ahmed. Okay, a revenue statement. Uh, revenue is profit and loss. Okay, in profit and loss statement. Okay, we will financial statement is the name, and then under financial statement is statement profit and loss, statement financial position. Okay, I can't hear you very much. Your I'm so sorry because your voice is very slow. I don't know what's going on. Okay, pardon me. Um, Your voice is not clear. I don't know what's going on. Um, your voice is very slow. Can you right increase the volume? I don't know. My volume is already 100%. I don't know what's going on with my earphone. Once again, you also cannot speaker value 100% only. It's just 100%. Dah increase. I already increased to 100%. Okay, so what is your question before this? Can you write in the box? Ah, Ahmed, write in this box. The answer. Okay, is revenue generation part of the financial statement? Yeah, it's included in the statement of profit and loss. You will find out the item for revenue inside the statement of profit and loss. Okay, Ahmed? Okay. A major. A major. No, it's not a major for the profit and loss statement. Okay, we will include the revenue. What are the major component of financial statement? Okay, so for financial statement, the major components inside it these two things. Okay, statement of profit and loss. Okay, the major components is revenue, expenses. Right, in profit and loss first. Okay, we have okay revenue, expenses. Okay, and in the major components for statement of financial position, okay, is asset. Okay, how many asset that you have? Okay, what types of asset? Okay, we have two types of asset, that is non-current and current asset. So what else is liability? Liability means the amount that you make a debt from maybe from the bank. Okay, that is liability. Okay, that is the so it's already there. Shows, okay, statement of profit and loss shows whether the entity obtains profit or loss during a particular period by having this component or the item, that is revenue and expenses. And then we will calculate for the profit. Okay, if the revenue is higher than the expenses, okay, so it will call it as a profit. So if your revenue is lower than the expenses, it is losses. Okay, so in statement of financial position, the component is the asset, liabilities, and honest equity. So all these items, all these component, all this classification we will discuss more further after this. Okay, so we also have the statement of cash flow. But for this topic, okay, this subject principal accounting, we will focus more on the SOPL. Also, uh, we call it as SOPL. Okay, in the short term. Okay, SOPL, and then statement of financial position is SOFP. Okay. Alright. So statement of cash flow later on we will discuss on maybe on topic the last topic if I'm not mistaken. Okay. And then notes to the account is also included in the financial statement, but for principle of accounting is we are not going to discuss. Okay. Notes of the accounts. Okay. So what is the objective of financial statement? Okay, same goes with this purpose of the financial statement is to identify asset includes movable or immovable or both. Okay. Asset actually we have to type that is non-current and current asset. Okay. Yeah. Okay. Wait for a while. Okay. For asset we have current asset. Okay. Second one is non-current. Okay. The terms that we use in accounting actually in Malaysia. Okay. Once again, my dear. Movable. Uh, mm, I'm not sure movable or immovable. But for non-current, that is the fixed asset. Fixed asset, we can non-current or fixed asset. The asset that we can use for a long term. Example of non-current asset such as okay table, chair, okay, pictures and fitting, that is non-current. Once again, I can't hear you. I'm not sure what are you talking about. Can you please write in the message? Oh, okay, something like that. Okay, non-current asset we will means immovable assets. Okay, okay, for current such as cash. Okay, can easily be moved. Okay, or can easily be convert into the money into money, such as your money in bank or your in cash money, and then in inventory. Okay, and account receivable. Okay, that is current asset. For non-current asset, yes, that is immovable asset, very difficult to convert to the cash. Okay, such as right. Okay, so let's look at the next slide. Okay, objective of financial statement to identify the asset resources and the claim to those assets. Okay, to evaluate the progress and performance over a period of time, so we can find out which whether your company is having the profit or the losses. Okay, that is the performance. Okay, to assess the future cash flow. Okay, whether your company having a lot of cash flow or not. Okay, to identify the business strength and weaknesses. okay, to make decision about the investment and credit decision. Okay, whether you want to buy, okay, you have enough money to buy other asset or not. Okay, that is the decision that you need to do. All right. So let's look at the main user groups of accounting information. Okay. So this we have two types of the user. User who is the person or individual that actually look at the accounting itself. Okay. So the first one is internal user. This is the person. Okay. Second, or the parties. Okay. External user. Okay. Internal is the person that work in the organization. Okay. And then for external user, who are indirectly involved with organization but work outside from the organization. Okay. Internal user is owner. Okay. If you are a boss, you are the owner of the business. Okay. You are internal user. Okay. Managers. Okay. The person that work to your in your company. Okay. Employees also. Okay. That is internal user. But for external, such as creditors. The creditors maybe the supplier that you have debt with them. Okay. Supplier of your item. Okay. And then you owe to them. Okay. That we call it as creditor. Okay. Or account. Okay. In accounting, we call it as account payable. Account payable. Okay. And then potential investors. Okay. The people with a lot of money. Okay. Potential. They always look into a potential business that can they invest in it. Okay. And then government. So government. Okay. In terms of uh, to impose you a taxable. Okay. You as a business, if you having a lot of profit, you must pay for the taxes to the government. Okay. Government is external user. Alright. So and also public, okay, or customer, that is external user. All right, is there any question of mine? No. Mm-hmm. Creditors and potential investor. Yes, yes, yes. Oh, it's different. Okay, creditors, some parties that you lend from them, and then you must pay maybe in a short term period. Okay, you must pay your debt, okay, to them. But potential investor is someone that need to be the owners, the owner with the business. Once again, yes, something like that. Business partners, or maybe if in corporation, they are shareholders. Okay, potential investors, and then they after they invest, they buy the share from that company, so they become the shareholders. Okay. Yes. Okay. Yes, that's right. So creditors is very different with the investor. Okay. Okay. So investor will get the uh will get reward from the profit. Okay, from the profit of the company. But for creditors, we should pay them for the money that we lend. Okay, we debt to. Okay. That is creditors, right? Very different with the potential investor. Okay, Ahmed? Okay, so let's continue. Okay, this is okay. It's just elaboration for the slide before. Okay, owners to evaluate the financial stability of the business. Why the user or the owners itself need the information of accounting. Okay, so to evaluate the financial stability of the business, interested in the profit earn, of course. Okay, you are conducting, you are uh, having the business, okay, because you need to get a profit, right? So that is why the owners need the information. Okay, managers, why managers need the information of accounting? For planning. Okay, they want to plan of the business, okay, organize and controlling the business. And to have the information necessary to make sound business decisions. Okay, employees, what they need about the accounting information. So to evaluate the firm stability. So if the firm is stable, so the employees will continue their working at that company. Okay, to get an idea of their employment prospect, whether they will get another benefit from the business such as bonus. Okay, if the company perform well, get a lot of profit, so the employees need to know the information because they want to have other benefits such as bonus. Okay, and then external creditors, okay, they need to determine the firm's ability to repay back the loan. Okay, that is the creditors. Investors to evaluate where the financial position and the capacity of the business, to evaluate whether the business is good for investment. Okay, government to determine the taxable income of a business. Okay, you are paying tax to the government for your business? Yes. Okay. How, okay. How many percentage? Okay. All right. Okay. Okay. All right. All right. Okay. Okay. So, what else? The government to make better financial decision for the economy. Okay. Public consumer for academic purpose maybe to know how the business manage and control the product cost and product pricing. Okay. So that is all about uh, users. Okay. Let's look at the types of various forms of business. Okay, we have three types: sole proprietorship, partnership, and also company. Okay, three types of business forms. Okay, so for the sole proprietor, okay, how about their registration? Okay, they must register with the business registrar. Okay, how about the partnership? Okay, in Malaysia, okay, partnership will register with the CCM or Companies Commission of Malaysia. Companies Commission of Malaysia. Okay, so same goes if you open up a company, so you must register. M is for Malaysia, Malaysia. Malaysia. M is stand for Malaysia. Okay, Companies Commission of Malaysia. What? Yes, authorized body. Yes, just to register the company and also partnership business. Okay. Okay. What about capital for the sole proprietor? Okay, the capital is contributed by the owner itself. Okay, and then for partnership, yeah, yes, okay, partners, yeah, it maybe for the owner is sole proprietorship just the one person only. But if the partnership company and partnership business, yes, contribute by the partners. Okay, so the profit sharing based on the agreement. Okay, and then companies contribute by, okay, the capital is contributed by the shareholders, as I mentioned before. So it's contributed by the shareholders. Okay, maybe from the potential investor. Okay, so if they find out the companies, the good companies to invest, so after they invest, they give the capital to the companies, so they will become the shareholders. Okay, by buying the shares. So they're having the percentage of the uh, equity of the company. All right, that is the company. Once again, I can't hear you lah. I'm so sorry. So you can write in the what? Sendirian Berhad is a partnership business, right? No. Okay. Example of partnership. Okay. Sorry. I mute. Okay. So example, no, partnership business. Okay. Um, not a Sendirian Berhad. Sendirian Berhad is actually companies. Okay. Companies. Okay. They have to share. Okay. So hold on, Ahmed. Okay. Apa benda? Alah, tak boleh. Mira, janganlah kacau. Fira, Abi, tengok Fira ni. Dia kacau. Okay, Ahmed. So sorry about that because I'm conducting the class, okay, at home. Okay. So sorry. Okay, so let's continue. Is there any question, Ahmed? No. Okay. So once again. Oh, can a foreigner Register the business in Malaysia. I am not sure about that, Ahmed. I will confirm with you later. Okay. 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 Okay, let's continue. Okay, ownership. Okay, sole proprietor owned by one person only. So it equals sole proprietorship. But for partnership, okay, the ownership is owned by two or more partners. Okay. So what is the example for partnership company? Ali and Abu Enterprise. Okay. For professional, okay, the example is Clinic Azhar and Rakan Rakan. So that is the example of partnership company. Okay. But for company, okay, ownership is a private company must have at least two or more 50 shareholders. Okay, we have two types of company, that is public and private. And then for private, a public company must have minimum of two and the maximum amount must not exceed the authorized capital. Okay, so let's look at the management and control. Okay, sole proprietorship is managed and controlled by the owner itself, and then for partnership is also controlled by their partners. Okay, and then but for companies, the shareholders is just the owner of the company. Why? The who manage and control is CEO, Chief Executive Officer. Okay, is appointed. It's a management team that appointed by the directors or by the shareholders. Okay, that is about management and control. Okay, for liability. Okay, how about the liability? What it means by liability? So let's look here. For sole proprietorship, unlimited liability, it means that sole proprietorship is unlimited liability. What is that? Okay, unlimited liability means that if the business is bankruptcy, so that the business is not having enough money or assets to pay the debt, so creditors have a right, so they have a right to get the money from the owner itself, the personal properties of the owner, such as their house, okay, car, okay, to pay back the debt from the creditor. That we call it as unlimited. Okay, same goes to the partnership. Okay, if the company bankruptcy, okay, the personal properties of the partner, okay, must be so the partner will sell all their personal properties to pay back the debt, okay, to the creditors. Okay, that we call it as unlimited. Okay, how about for the companies? Okay, the liability is limited. Okay, if the business fails and the assets are not enough to cover the debt, the creditors do not have a right against the shareholders' personal property. So the shareholders will only lose the money of the investment. Okay, the amount of the amount of the money that they invest to the company. Only that. A limited liability, you don't need to pay with your personal property. Okay, so properties of the company itself will be sold to pay back the debt. Yes? Company's asset you must sold, okay, to pay the debt. So you don't need to pay with your own properties or your own money, your saving, okay, in your own bank account. So because in companies or actually in a business, in a point of accounting, okay, the owner and the business itself is two different entities. Okay, your own money, yes. Uh, what if the company asset is not enough? So just so it means that the debtors, the creditor will uh just claim the enough asset only lah. Yeah. So they have not right. Mm-hmm. No, no, no right of all for all the remaining debt. Okay. Okay, so let's look at the books and account. Okay, if sole proprietorship, there is no legal obligation to keep all the books and prepare for the account. Okay, but for partnership also. Okay, but for companies, okay, you should have a proper books of account. Okay, must be kept and annual accounts must be sent to the CCM. Okay, you should prepare a proper books of account. Okay, proper financial statement. Okay, if you open the company, okay, and then you must register to the CCM. No, 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 no. You must submit, okay, your financial statement to the CCM. Okay. So how about the profit and loss? So proprietor is okay. The profit is belong to the owner itself, okay, and then for partnership will be share. Okay, the profit will be shared with the partner. And how about company? Profit will be paid to the shareholders in terms of dividend. Okay, so the shareholders will get the dividend from from the share. Okay, from the profit of the company. Okay, and then yes, uh huh, uh huh, yeah, no, no. For companies, it's actually you should have a lot of capital in order for you to open up your company. Okay, you must of we call it as offer wait wait you need to uh what we call is new, yes, capital investment. You have to we call it as a new what we call it, yeah, hold on, apa nama dia, you should uh yes, you should have a lot of uh, capital for opening the company. Okay, so that you can have a share. So you should get the potential investor to invest in your company. Okay, where is it? Capital, capital of capital requirement. Can you write in the message, Ahmad? Okay. What is the minimum capital required for starting a partnership business? A partnership business. If you want to open up the partnership business, you should know what is industry, which industry that you want to open up the business. You are planning to what? Technical business. Hmm. Okay, for partnership, maybe 50,000 above. It will depend on the industry and what types of business that you need to open up. Okay. Uh-huh. ID business, interior designer. ID information IT. I'm so sorry. Information technology. Maybe about 70 to 80k. 70 to 80k ringgit. What? I can't hear you. Can you write solo? I'm so sorry. I can't understand because I can you write in the message? How much is the minimum for personal business? Okay. For personal business means that sole proprietorship, right? So it's less than 50,000. It's less than 50,000 if you are planning to just open a trading such as a shop, okay, retail shop, okay, it's just not more than 100,000, just 50,000 enough for you to open up the business. Okay, are you planning to have a business in Malaysia, Ahmed? Okay, so shall we continue? Okay, so let's look at another slide. Okay, regarding the differences between the private and public limited company. Okay, so private company actually having the name, okay, at the end of the name of the company, they have Sendirian Berhad, SDN BHD. So for public company, usually having BHD. Okay, so for private company, maximum you must have 50 members. Okay, transfer of share must be authorized by other shareholders. Okay, you must open up the shares. Okay, you must authorize for the shares, that is capital. Share cannot be issued to public. Okay, cannot be issued to the public and controlled by a family usually. That is the private company. But for public company, okay, no limited of members. Okay, no authorization is needed to transfer of share traded in open market. Share can be issued to the public. Okay, anyone can buy the share. Okay, controlled by the majority shareholders. Okay, majority shareholders because they issue to the public. Okay, so that is the difference. Yes, any question? Okay, so let's continue. Okay, differences. Okay, let's look at the accounting and bookkeeping differences. Okay, so bookkeeping is the different from accounting as it is only a part of accounting. Bookkeeping is only a part or a technique under the accounting. Okay, such as okay the process of we want to classify which types of the uh, source information or transaction, and then you want to record all the bills and receipts, and then you summarize the business transaction, okay, into the financial statement. Okay, that is the bookkeeping system. We call it as a bookkeeping system. But for accounting, it involves not only the process of identify, recording, but also you need to communicate the information in the financial statement. Okay, you must analyze and interpret okay the financial statement. Okay, where tasks are carried out by the accountant who are professionals. So accountants will know how to calculate for the ratio, that is the analyzing process, okay, and then the accounting will know how to interpret the condition of the company itself, okay, by looking at the financial statement. Okay, so accounting is more a big area, cover a big area, but for bookkeeping is just a technical part inside the accounting. Okay, is that clear? Okay, you want to take 5. Once again, my dear? Sorry. Okay. I'm so sorry. Okay. A final analysis and interpretation is done by the chartered accountant, right? Yes, that is correct. Okay, chartered accountant. So that's why, okay, so the accountant executive, okay, on in the company, okay, will prepare for the financial statement, okay, and then uh, so it will approved or authorized by the chartered accountant, okay, so to open up the business for accounting sector, accounting and taxation, for example, okay, the person should have chartered accountant, okay, final analysis is done. Okay, is that what you are talking about? CA is chartered accountant, Ahmed, is that true? Oh my god. Sorry, Ahmad, CA is chartered accountant, right? Okay, so that's why. So after the company having preparing the financial statement, okay, it must be authorized by the chartered accountant. Okay, so chartered accountant is actually okay, the person that having a qualification in accounting, okay, study in accounting field. So after that, they must uh, having an experience, 5 years, about 5 years in industry, and then they will have a exam, okay, taking an exam to get a chartered accountant. So they will certify, authorize the financial statement that prepared by the accountant executive. Okay, Ahmed? Okay, so let's continue. Okay, so for topic one, okay, actually, I hope that you will understand the definition, history, and development of accounting, and then know the differentiate how to differentiate between the bookkeeping and accounting, and then what is the accounting cycle, okay, what is the pictures, okay, simple pictures of the accounting cycle, and then understand various types of the business organization. Okay, so let's look at the second topic. So today we will cover two topics. Okay, the first one is introduction, and then the second one is the accounting principle. Okay, so what is the principle in accounting that you should know? Okay, so before you are learning about the technical parts in accounting, such as how to prepare for the ledger, journals, and so ever, so you need to know what is the concept of accounting. Okay, what is the difference between accounting and other line of the knowledge. Okay, so conceptual frameworks or accounting concept principle is the rules. Okay, the rules, you need to understand the rules in accounting. You cannot similarize, okay, you cannot uh, have a same thought in accounting with other, for example, science. Okay, that it is a different field, or it is different line of knowledge. Okay, so if you are learning about accounting, you need to know the rules, okay, in accounting that must be followed to ensure subjectivities. Okay, means that if the subjectivity means that accounting in Malaysia is also the same with the accounting practice in Malaysia must be the same with the accounting practices in all over the world. Okay, that is the subjectivity. So because of that, accounting come up with the conceptual framework. Okay, so what is the rules? Okay, accounting conventions, basis, and policies. Okay, so what is the difference between convention, basis, and policy? Actually, the convention is just the same. Okay, but what we want to highlight here is convention is assumption, which refer to general understanding ideas. Okay, how about the accounting basis? Okay, it referring to the basis or the process on how you want to measure the things. For example, how you want to calculate for the revenue, or how you want to record for the expenses item. Okay, that is accounting basis. Okay, most of uh, all of the country will use the same accounting basis. Okay, so what about accounting policy? Is the adoption of accounting method and the consistent application of the method. For example, depreciation. So depreciation is some of the calculation that we need to calculate uh, for the non-current asset. Okay, how much of the non-current asset we depreciate? Okay, because of uh, we know that all the assets, okay, if we use it, okay, the value will depreciate, okay, will reduce, okay, that we call it as depreciation, okay, because of wear and tear, okay, so some of the asset will reduce, okay, we will value the amount, okay, lower than before we buy in the first time. Okay, that is accounting policy. So let's look at accounting concept. Okay, in accounting uh, we have about 5 accounting concepts. Okay, the first one is economic entity. What is economic entity? Later on we will discuss. Going concern. What is going concern? Historical costs, monetary, periodicity. What is it? Okay, let's look one by one. Okay, we have not only 5, but actually 9. Materiality, neutrality, comparability, accrual. Okay, before this I already mentioned about accrual, right? Okay, so later on we will discuss. Okay, so let's continue. Okay, what is economic entity? Actually, economic entity means that the business is separate and distinct from its owner. Okay, other terms of economic entities is separate legal entity. Okay, and then item recorded. Okay, item that you record in the accounting itself, okay, are limited to the transaction affecting the business only. Okay, the money that you use for the business, okay, you must separate with your personal money, okay, that is economic entity. Okay, you can, if you are an owner of the business, okay, you are not supposed to uh, take take out the money from your business, okay, and then to use for your personal purpose. Okay, that is not correct in accounting concept. Okay, you must separate it between your business money and your personal money. Okay, that is economic entity. Okay, so how about going concern? Okay, going concern is assumes business have an indefinite life. Okay, the business will continue to operate in the foreseeable future. So in accounting, okay, we will just assume that your company, okay, in order for you to do to prepare for the financial statement, okay, to the your company will continue to operate in the foreseeable future. Okay, we cannot assume, okay, in accounting we cannot assume that after 5 years your business will bankruptcy. Okay, that is not correct. Okay, the correct one using the accounting concept, so your business will continue in foreseeable future. Okay, Ahmed, can you understand? Okay, right. So let's look at the historical cost. Okay, what about the historical cost? Okay, so you know about before this about the asset, okay, service and liability, okay, all the things are recorded. Okay, you already know that we can we should record all the amount of the asset liabilities in the financial statement, right? So we are using the cost of historical until it's sold or used up. So the amount that we record in the financial statement, the amount that you first time buy that thing, okay, buy that asset, or you make a loan to other person, okay, that is liability, you must record amount at cost. Okay, so cost is actually definite and determinable, provide objectivity, measure on cash or cash equivalent basis. Okay, We did not record accounting using the market or current value of asset. No, not using the current value or market value. We just record, okay, the asset using the record at cost or historical cost. Okay, and then monetary concept. Okay, so records. Okay, what is the value that we record is using the monetary value. Okay, records and report transactions. Okay, which can be measured in terms of ringgit Malaysia. Okay, if you are in India, okay, you must record the accounting using monetary term of uh, what what currency? India using rupees, right? Yes, rupee. So in Malaysia, we are using ringgit Malaysia. Okay. So why? Because the monetary. Okay. What is the reason using the monetary in to record the value of the items in accounting? Because the monetary is the common denominator. Okay. And then appropriate basis for accounting measurement and analysis. Most effective means changes in capital and exchanges of goods and services. Okay, most effective means by using the monetary terms. Okay, how about the periodicity? Okay, so for the business, okay, we must record the accounting concept based on the periodicity, or we call it as the accounting period. Okay, business activities divided into regular time period. Normally, all companies are using annually as accounting period. So on the accounting period, you just record, okay, the amount or transaction that occur between the first accounting period until the end of the accounting period, which is 12 months. Okay, normally 12 months. Okay, if you are starting your business on 1st January, okay, 1st July, for example. Okay, so you are starting from 1st July. Okay, you are counting until 12 months. 8, 9. Okay, for the August, uh, September until 12 month is when is the year end is on 6th 2022. Okay, if you are starting the business on 30th June, okay, 30th June, okay, until okay, what the year end is on 30th June 2022. Okay, that is the accounting period. Means that on that time, okay, on that 12 months time, the transaction is occurring, okay, for your business. So you just record on that time only, okay, not more than that or not less than that. Okay, so accounting, yes. Is there any question? No question? Is there any question? Oh, I read, ma'am. Okay, okay, okay. So I hope that we will understand the accounting periodicity. Okay. Okay. Next. Okay, why in accounting they have a periodicity concept? Because it's easily to compare and make analyze of the financial business position. Uh, if you are in 2021, okay, how about your performance in a business? Okay, whether you are having a profit or losses. Okay, so we can easily compare between other years. Okay, that is because counting concept having the periodicity. Okay, you need to identify for accounting period. It is very important. Okay, okay. Next is materiality. Okay, what is materiality? Material has a significant effect upon income or the financial position of the company. Okay, for example, the cost of new building. Okay, non-current asset, but cost of eraser to be expense of. Okay, measure maturity depends on the circumstances surrounding a business transaction. Okay, for example, like this. Okay, in accounting, okay, we should look at the value with the materiality. Okay, means that the value is higher. Okay, big, big amount. So that is means by the material. Okay, if we compare with the cost of a new building, okay, if you want to buy, okay, 100,000 cost of a building. Okay, if you compare with cost of eraser, okay, it just is it just not material. Okay, if you look at the value of eraser, so uh, you need to identify the cost of new building, which is material, and you must put in the asset value. Okay, you must add on in classification or item or components of asset. Okay, with the cost of 100,000. But if you compare with the cost of eraser or cost of stationery, pencil, pen, okay, just a small value, right? Okay, so you not include the value of the stationery, okay, into the asset. Okay, because it is just not material. Okay, you must expense off. It means that uh the cost of stationery, okay, you must put inside the expenses criteria, the expenses classification. Okay, so it is because of the materiality concept here. Okay, we just look at the significant material that you need to put inside the asset. Okay, asset component. If you compare with the cost of stationery, so it just uh, not more than maybe 100 ringgit. Okay, so you should include the cost of eraser into the classification of expenses only, not the components of asset. Okay, Ahmed, can you understand? Okay, are you okay, Ahmed? Are you tired? No, I cannot hear you anymore. Are you okay? Okay, very good. So let's continue a little bit and then we will dismiss, okay? So let's look at accrual concept. Okay, expenses for the accounting. Okay, what is the accrual concept about? Expenses for the accounting period incurred must be recorded irrespectively or whether they have been paid or not. Okay, So in accounting, we should record all the amounts that is actually not recorded the amount that we already paid or already get the money. But actually, even though the expenses or the revenue, okay, we did not get yet, okay, not received yet or not paid yet, we should also include if the items or if the transaction is occurring on the accounting period. Okay, if okay, the accrual concept, okay, the opposite concept is the cash basis. Okay, cash basis means that we must record all the amount that we already expend the money and we already get the money. But for accrual, okay, it's different with the cash basis. Accrual basis, even though the expenses incurred is not being paid by us, we already should record in the financial statement. Same goes to revenues. Okay, even though the revenues we should earn, we already earn, but not receive the money yet. Not receive the money yet. What we already know, we will earn the revenue, so that revenue will include in the financial statement in the accounting period, on that accounting period. That is means by the accrual concept. You must record in the financial statement on that accounting period. Even though, okay, the money is not get, the money will not get yet, receive yet. Okay? Do you understand, Ahmed, about accrual concept? Okay. So you will find out all this concept when we are doing the technical parts. Okay, to prepare for the financial statement. Okay, do not worry. I will highlight it back. Okay, this is the example of accrual concept. So I will highlight it for you. Alright. So how about the neutrality? Information must be free from bias to be reliable. If financial statements are prepared to influence users' decision to achieve a predetermined outcome, financial statement will lose its neutrality. Okay, for example, like this. Yes, are you talking with me? I can't hear you, Ahmed. Your voice is getting slower. I can't hear you. Lah. Can you write in call messages? Okay. So you can hear me. So is there any question, Ahmed, that you want to ask? No question. Okay. Alright. Okay. So let's continue a little bit. Okay. Okay. Neutrality means that if the accounting itself, the accountant you want to prepare for the financial statement, make sure that you are not doing the accounting, okay, the financial statement with the influence of others, okay, the influence from the manager, okay, because of you need to follow the instruction of your manager. No, okay, it's totally wrong. Okay, you need to, as an accountant, you need to follow for the accounting concept, that is neutrality. so that the financial statement that you are preparing is not is very reflect to the condition, the true condition of the business. Okay, that is neutrality. Okay, comparability, user. Okay, what else? The accounting concept of comparability. User must be able to compare business organization financial statement through times to identify the trends with the other business financial statement to evaluate financial position and performance. So accounting concept should be comparable. Means that, okay, in order to compare your business in the same industry with other business, okay, so which business is more profitable, is more stable, okay, how you want to compare the business, okay, by using the by having the financial statement information. So that's why accounting concept uh, is comparability. You can analyze, and then you must identify which company is having a better and stable business. Okay, that is comparability. Okay, so a little bit. Okay, a little bit. Okay, okay. Let's look at the qualitative. Okay, before this, we just uh, look at the accounting concept. Now we are looking at the qualitative characteristic. Okay, okay. If you know, okay, the counting is about how to calculate. Okay, we will look at the technical parts. Okay, you must count it. Okay, as a mathematical uh, ways. Okay, but accounting also having a qualitative characteristic. Okay, okay, should have a qualitative characteristic, that is understandability, reliability, consistency, and relevance. Okay, such as understandability, user must understand. Okay, means that your financial statement that you prepare must be understand by the user. Okay, so that the user will easily doing to uh, to make the decision. Okay, user specific quality, because user will differ in their ability. Okay, because we already know that the user outside there, not everyone will have the knowledge about the accounting. So we must prepare the financial statement. Okay, so that all the people will understand our financial statement. All the people will know how to read the financial statement. Okay, that is understandability. Consistency, okay, the method that you use. Okay, if this in your company, if this year you are using the basis of maybe in depreciation you are using the method of cost basis, so next year you must consistent using the same method also. That is means by the consistency in terms of uh, how you calculate, okay, your account, how you calculate for the depreciation, okay, must be the same with other years, because of we need to prepare. Okay, you so that, because why you need to be consistent, because it's easily to compare between years. So that's why you need to prepare the financial statement with the consistent basis or method. Okay, and then let's look at the relevance. Okay, okay, the capacity of information to affect a decision. This implies that timeline is a desirable characteristic of accounting information. Your information must be relevant. Okay, so that, okay, the data, okay, that you get from your source document must be relevant. Okay, to the accounting period. Okay, so that the information will be uh, the information is not it is relevant for you, okay, and your users. Okay, how about reliability? For information to be reliable, it must be verifiable, representational, faithful, and neutral. Okay, information is confirmable. Representational, useful, the information reflects reality, the information truthful and unbiased. So that uh, your information, your data should be reliable. Okay, that it means by the reliability. Okay, that is just a qualitative characteristic. Okay, not more than that. It's just the theory parts. Okay, so that's all for today. Is there any question, Ahmad, before we end the class? Ahmad, is there any question? No question? I am so sorry because I can't hear you, Ahmad. If you're having a question, you can type in of info message. Hello, Ahmad. Are you there? No question? I'm so sorry. I can't hear you, Ahmad. How to assess the reliability? How to assess the reliability? Okay. So if you look at the financial statement, okay, reliable means that the information included in the financial statement, okay, should be reflect the true condition of your business. Okay. For example, if you are having a losses, okay, in your business, okay, you are not you supposedly not you should reflect the true condition in the financial statement. You should uh, include the amount of the losses. You must be what we call it prudence, or apa tu, in Malay we call jujur. Okay, that is how you want to assess the reliability. Okay, yes, Ahmed, please start, Ahmed. I can't hear you. And neutrality same. Okay, it just means that we must not doing the financial statement, okay, with because of our conflict of interest. No, because maybe some of the owner outside there, okay, they want to have the financial statement with the higher profit. Because of what? They need to get the capital, the loan from bank maybe, but then the true condition of the business is not like that. Okay, they are having the losses, they are not enough, they are not generate the revenue. Okay, so the the accountant itself should neutral, not should truthful or not unbiased, because they need to follow the instruction of the manager or the boss. Okay, should be neutral. Okay, Ahmed, can you? All right. So if you are not having any question, so let's just end the class now. Is it okay, Ahmad? Okay, so let's continue with other session of the class. Okay, maybe we will conduct the class uh, at night. Okay, weekend also. Alright, maybe Sunday or Saturday. I will uh, inform you in the group WhatsApp later. Okay, thank you so much, Ahmad, for joining the class today. Bye. Assalamualaikum. You're welcome, Ahmad.